Good evening, all. Ira Epstein with your Tuesday evening metal market wrap-up, and this wrap-up is for Tuesday, May 10th, 2022, and the time, 5:55 p.m. Well, we're going to get President Biden tomorrow in town. I actually thought he was in town today. The reason is I have a nephew that is part of the White House, if you will, and he was flying in because I'm having dinner with him tomorrow, and I thought that he was staying overnight. I got it all screwed up. He flew in ahead of time, doing certain setups, and I'll see him for dinner tomorrow. My fault. And because when I saw Biden today speak on TV, I thought, well, he was in Chicago. But Draghi was, and I'm talking President Draghi of Italy, was meeting with him today. Let me get to the event that's going to be very important tomorrow for the metal markets. What's inflation going to look like? Is it going to be red hot? Is it going to be simmered down? Is it going to be flat with where it was? And the market's going to read many things into this. If the market is under an 8% CPI number tomorrow, market may say, okay, we've seen the peak, it's coming down. If the market's like an 8.6, 8.5, it's liable to say, no, there's no sign that it's yet peaked. Anything near 9 could be a real problem for the market because they'll say it's still streaking. Hard to tell how the market's going to read it, but it's going to be all over the board reading it. So please, when it comes out, just understand the algorithms are going to jump on the market. It'll affect the stock markets, currency markets, everything in the financial arena, not grains and things of that nature typically. So please be careful. We're seeing a good sell-off, as you can see, in the energies. Unbelievable day in nat gas. I don't know if you saw the range in nat gas today, like $1. I mean, it's insane how wild that market was. If you're watching the bonds and notes, there's somebody betting here that the CPI is going to fall back and the Fed won't be so red hot. You've taken the 10-year note that was just over 3.2% in the past 48 hours back under the 3% number. So something slipped back there. Remember, we had the curve yield invert at one point. It's nowhere near that at this point in time either. There's an awful lot going on. Now, I, for one, don't believe markets go from bull to bear. I think they can go from bull to neutral or bear to neutral, but I don't think they just instantly switch. So please keep that in the back of your mind. As for the gold market, it just sort of stuck right here. The copper market's going to stay stuck, frankly, until China makes a decision to get rid of this absolutely insane zero tolerance policy. I heard they're locking down, read it in the papers today, that they're locking down even further parts of Beijing. So it doesn't appear things are going to get easy. Did any of you look to see how little cars Tesla produced this time, this quarter, because of the lockdowns? It's shocking what they were doing in China. They can't get the people there. When we look at gold on a weekly close, we are now down 2.4% going into the Wednesday trade. When you look at the chart here, this does not look like an inflation commodity, right? It has just been falling apart in the gold market, and what it's fighting is obviously the increases that we're getting out of the central banks around the world. The U.S. there, other banks there, and this is weighing on this market as it's coming down. You're still very much in the bear camp. You got down to the 200-day average. Now, we were just talking yesterday, and I said if the market rallies, look for the resistance up at the 100-day moving average. If it breaks, the 200's waiting for you for support with the combination of the Bollinger Band, and there's your Bollinger Band. So it's slightly under it, 1815, could be going there in order to find what it's going to do. But I feel comfortable in saying that on rallies, I'm expecting resistance from 1885 to 1898, and now you've got a new problem. The 18-day average of closes has slipped under 1910.70, this peak. So that's going to give chartists the idea, hey, that is a good resistance area to hit into, and you have another issue. Look at the numbers. You can't use tonight's numbers, but you can use the close on Tuesday. Both numbers were under 20 in the slow stochastic. The day before, what are they? They're under the 20 level. And what are the day before? So they are fully embedded. How do you handle embedded slow stochastic with Bollinger Band? As you know, I have a course that teaches you this. I want you to take it. All you need to do to find out more at any point during this is just move your cursor up, hit the icon there. It'll take you right to the page so you learn how to work it. This is going to be an important day tomorrow as to how this all starts playing out. I think you should pay attention to that. The gold-silver ratio, silver just keeps losing to it, and it should. Okay? If you can't use the base metals, you got a problem. And the base metals, because China's so important to this equation, and they're not showing signs of easing up, well, you keep embedded, and it tells me that the pros are selling rallies. You had a bearish crossover way back here. Notice I got this working today, thanks to my IT people. They figured out what was the issue, and it's all fixed, we think. And you can see how the market right there was your crossover, and ever since it did it, you can see how you've pretty much tanked. Here, too, the question is, what do you do if you get a hard rally? This 18-day average of closes is near that peak. I think the pros are waiting with both hands to sell the first hard rally in the market. If they're wrong, they'll know it when they lose the rest.